What's going on, everyone? It is November 14, 2020. My name is Faisal. Y'all already know what I do on these videos. Basically, I'm just going to recap some of the interesting things that I saw in the stock market this week. So this week, we're going to cover over a couple of things because it was a really eventful week, starting from the beginning of the week when we got word that Pfizer produced a vaccine with a 90% effective rate. And as a result, the market just took off like crazy. You had bailout stocks go insane. We'll take a look at those in a little bit. We had a bunch of other moves too that happened throughout the week after that I think um, really pose a question as to where the momentum is going to be shifting to even after this catalyst. Because first and foremost, I don't think this catalyst is going to last that long because I'm someone who believes that the distribution still has to be worked out. But I don't know how long that's going to take. I'm not a scientist. I just know that time is very precious now, and in order for consumers to get back to normal habits, this vaccine needs to be able to be distributed and widely accepted throughout America and the world for things to ultimately get back to normal. And for these stocks like the banks, um, the bailout, cruise line, airlines, they all need that vaccine in order to bring customers back. So ultimately, even though they saw really big moves today, and we'll go over that in a little bit, I still want to believe that there's so much uncertainty as far as where this market is going, and I don't think you can use that vaccine as a reason to buy into certain sectors, at least now. I think that what we saw on Monday was a really good it was just a really good short-term catalyst. I really don't think there's going to be much legs to it. And once again, I'll go over everything in the charts as I usually do. But we're just going to take a look at those things that happen throughout the week and how that plays out to next week. And then I got three stocks, interesting stocks that I am looking at potentially because they are close to long-term support levels. So I'll go over those three with y'all at the end of the video. So let's go ahead and get to it. Let me share this screen real quick. All right, cool. Is this anything? Okay, cool. Just making sure. All right. So let's go ahead and get to it. So this week, as I mentioned before, during the beginning of the week, we had a huge catalyst that was prompted by the vaccine. And so you had a lot of these companies, whether it was the cruise lines. Let's go ahead and just take a look at it on daily. This gap up right here is that Monday right here. So um, last Friday, Royal Caribbean was at closed at 58.50, and by the time the gap, why is this not going in? There we go. Okay. By the time Monday rolled around at the high, it was actually at 79 bucks. So that is a huge spike from 58 and a half to 79. I can't remember the percentage exactly, but what was really interesting about that, you'll see this pattern play out in a lot of these bailout companies, more so than things like Apple, for instance. Even though Apple did have a nice open, once again, it sold off. You didn't really see that catalyst push tech stocks as much as it did the bailout groups or the banks or the value stocks. Like I think energy also went up substantially on Monday. Yeah, look at that nice price increase and held on relatively well, better than the other companies. But we'll go ahead and get into it right now. So on Monday, some of the things that I did want to go over is, yeah, we know that the bailout stocks did good because ultimately this is good for their business, but what happened to the high growth stocks that supposedly had these huge premiums baked in because of the fact that COVID was restricting the environment, and more COVID pretty much means a higher adoption rate for these companies' products. So things like Coupa Software, which is one that I'm sure, this stock had a really nice bounce from its lows a couple weeks ago. These stocks have been selling off, but look at this. Where is Monday? I think it's 11.9. Monday it actually opened at, I guess I can't see the open, but the high was 303, the low was 284, and the close was 285. So once again, you can see that at least a selling wave was prompted within high growth stocks like Coupa. Let's go ahead and take a look at Okta, which is a cybersecurity leader. Same thing, the gap down, sell off. Let's check out Zscaler, same thing. And then the biggest, let's check out actually Peloton real quick. Look at that gap down, that is huge. You know, on Friday it closed at 125, and then on Monday's low was all the way at 94 bucks. So that's a huge swing down. Ultimately recovered a little bit, but let's just check out Zoom real quick. Zoom has been the biggest, definitely the biggest, and maybe the most justifiable name in this COVID environment. You know, management is really smart. They're accelerating their profit avenues. The adoption rate of this service seems to be, like, I think it's actually going to be consistent even beyond this vaccine. I actually think the era of snow days and things like that, we don't get snow days down here, but things that prevented students from logging on, once again, I think you will have big audiences, or I'm sorry, big organizations like schools and whatnot, do things like Zoom classes and keep subscriptions open, because once again, there are still many things beyond a pandemic that could cause schools to shut down. As I just mentioned, snow days. I think they're a thing of the past. I think if you were praying for a snow day, you're probably just going to be getting on Zoom and doing online schooling that way. I don't know, maybe not, but I tend to think that because of how much technology has been adopted, at least in the education space, regarding just Zoom's online teaching process, I think it's going to be continued, and they'll probably end up adopting it for any type of emergency reasons in the future. So Zoom, I think, has a really nice runway for growth even beyond that. But once again, the reason why I like talking about Zoom is because not only has it been one of the best performing stocks in this COVID era, but the longevity beyond it. It means that even though you see the super high PE right here, and growth does seem to be tailing off in 2022, but 2021 is still very strong. Still at a $2.51, you do not want to see that. But as long as revenue growth continues to be triple digits, I think it's really hard to gauge 2022 at this point. But 2021 nonetheless looks great. I want to see this stock hold up. This should be, out of all the COVID stocks, it should be the one to hold up the best, even though it has the high valuation, because once again, all of these guys have really high valuations. I mean, you can go at Coop, you can go to Zscaler. Look at this, 500. I mean, all of them have super high valuations. I know Zoom gets a lot of heat for it because they're like, how can this company be worth that much? But you know, it's growing better. I think the management is really smart, and they seem to have a niche built for themselves even after COVID fears die down. So Zoom needs to hold up, bottom line. And when it starts to be one of the first leaders to break down, that's when I get really worried. And ultimately, even though it had this huge gap down on Monday, it kind of recovered to a nice level throughout the week. Really, I believe right after Monday, COVID fears started to resurge again. And I believe England started locking down, or Europe in general just started locking down more. And that created this sort of short-term catalyst back for these stocks. So even though they were selling off on Monday because of the vaccine, I think those optimistic feelings were tempered a little bit. And the reality of the fact that we're still going to be dealing with a highly COVID environment, you know, sunk back into the market. And so these guys ended up recovering a little bit. But on Friday, and I was mentioning this to our Discord channel Thursday, that even though it had seemed that the virus fears were starting to create some momentum for these names, like Zoom and Peloton after their lows hit, it wasn't the time to get in. And I know a lot of people were taking shots on them, and I was very close to doing so as well. But Friday, they just seemed to lose all steam. And not only that, I mean, this is a pretty big move. I know you can't really see, doesn't really seem like that big of a move just by looking at here. But once again, this is a continuation of a downtrend. And when you have Zoom close this badly with this amount of volume, kind of still maintaining this very steep downtrend, that's not a good sign, because this is the one stock that I said needed to hold up, at least from my perspective. This is one of the ones that I expect to hold up over everything. ServiceNow is also a really good company. I don't think it's as expensive. Yeah. This one is also excellent high growth company, been at the top of my list for a long time. This is also showing some signs of stagnation, and it's not breaking out above key levels. It's just kind of consolidating, waiting for either some direction in the market. And so far, just judging by what Zoom is telling me, what other leaders are telling me, let's go ahead and check out um, let's go ahead and check out Zscaler or Okta. I mean, Zscaler, same thing, kind of hit above its or near its 50-day and then started to sell off once again, continuing this short-term downtrend that kind of seemed to be playing out, but maybe, we could be right in the early to middle stages of this pullback that could bring the stock down to either 120 or even as low or as much as 100, 105. So yeah, I think these stocks are very expensive. I mean, the fact that this company is only going to make 53 cents in 2022 and it's like $131, I find it hard to believe that this thing can be sustainable, especially in such a crowded environment as cybersecurity. So I ultimately feel like high growth stocks in general may be at an inflection point as far as coming into reality in terms of valuation. But once again, as long as COVID continues to play some hand in the restricting growth in other areas, the bid for growth, I think, can be limitless. So I'm just very confused, and I've mentioned this many times throughout the week. I was just very confused by the moves that I was seeing as far as what sectors were doing good on which days, the amount, like the market gapped up on vaccine news, but then it seemed to start to price in another resurgence of COVID, which is something that I thought that was always kind of expected. People were talking about this bad winter for a long time, and the market continued to ignore it until supposedly we come out with a good vaccine. So it's just weird. Ultimately, it doesn't paint a good picture for me in terms of investing in the short term, because I was unable to find any buys this week. I actually did not buy anything this week. I just kept selling into the rally, and for the most part, I continue to be very confused as to what can go up in this market, because I can't trust high growth, especially after Friday. And value seems to be doing well. Like, I really like oil. I know I said oil was dead and stuff like that, but ConocoPhillips is a really good one. EOG is another good one. There was also one that was there was another one that was really, really good too, like profitable fundamentals. I forgot. But anyways, EOG, COP, and then I think PXD is also really good too. All of them are E&Ps in the oil space. They've all been beaten down extremely bad. Those are at the three at the top of my list, and I think they're holding up really well. The estimates seem to be bouncing back somewhat better. And ultimately, I think if you're looking at 2021 numbers, which as we approach 2020, those are the numbers that are going to start to matter. These companies look decently like, there's going to be a very strong bounce back that could last maybe like these companies in 2019, PXD was making $8.18. I understand that oil demand may never go back to what it was before, because of the resurgence of alternative technologies like renewables and electric cars and stuff like that has just been enhanced over the past couple months. And now that Joe Biden's in office, I think that's only going to see more momentum as things go on renewables. But the bounce back should be really hard, and the really good companies, like I talked about ConocoPhillips being one of the good oil companies that had a lot of cash on hand. They're going to be able to buy some distressed assets, because once again, we're still dealing with a really bad COVID timeline. Like, it could be another 3 months before things are widely distributed, even though we have a vaccine. So this is still going to be a bleed out scenario. And fortunately for the companies that have a lot of cash, like I think ConocoPhillips does, they're going to be able to make some really nice acquisitions in some distressed companies, because oil demand will continue to be somewhat suppressed, and the companies that are unable to ride out this wave will eventually be acquired, and those are going to be some great assets that will get acquired. unless the government steps in and bails out these companies, but I don't know. I have no idea. I'm just thinking in terms of the natural cycle of businesses and whatnot. So COP, really good one as far as I think they already acquired a big company this year, but I feel like they could do another one if things get bad enough for some more distressed companies. EOG and PXD are mainly my top two because of the bounce back rates in 2021, as well as margins held up significantly better than other companies. So yeah, I think keep an eye on those three. I like oil and gas the best out of all the value sectors. There was also one other name that I wanted to talk about, Marriott Vacations. This was my top bailout stock before, you know, this week or whatever. I was talking about how it was making a very nice base. Things looked really good from the fundamental standpoint because I was looking at these bounce back rates in 2021. $5, that's the third or fourth highest. That was kind of what they did in 2016. And what happened in 2016? The stock was at somewhere 81, and then you kind of have to do it also in 2017. So 117. I just thought it was, at that point, I thought it was undervalued based on this growth rate. I didn't expect it to make it to make an all-time high, but nonetheless, for those that are looking for distressed companies that should bounce back when things recover, I think keep an eye out on Marriott Vacations. That's just what I wanted to talk about because it made all-time high, which is crazy. It's absolutely crazy, but the fundamentals are good in the company. But once again, we're still in a very shaky environment. So doubt this holds up, but definitely want to keep an eye out on. Okay, so now let's go ahead and check out, let me see my list real quick. So we already covered the initial moves. There's a lot of uncertainty as far as the future momentum is concerned. Don't really know if growth has the momentum or if value has the momentum, but once again, value seems to have the edge at this stage. And as I just covered, I think oil looks the best in my opinion. Those three stocks, not financial advice, those are just the three that I'm watching personally the most. So next week, now that we've covered this week, what to expect from next week, I think it's going to be somewhat of a volatile week. I think we're going to see volatility come in early on. I was expecting a lot more Friday, but we seem to only get it in the high growth space where you had stocks like Zoom selling off around little under 6%. DocuSign was sold off more than 3%. Twilio sold off almost 4%. You had a lot of companies perform badly to a high degree on Friday, even though the market was broadly up. I think the Dow was up 400 points and whatnot. So I expect a lot more broad volatility, not just in terms of high growth selling off a fair extent. So I think we should see it early on. And once again, as I said, these short-term downtrends seem to be continuing. Like we just looked at Twilio, we just looked at Zoom, we looked at what else? What did I just do? Damn, let me just see Adobe real quick. Adobe's a good one. Okay, Adobe doesn't look like it's continuing the downtrend, but doesn't look like it's breaking up anytime soon. So once again, the majority of the high growth stocks seem to be in this continuation of a short-term downtrend. Haven't really shown signs of bottoming out just yet, but once again, I just expect these guys to see a lot more pain in the coming weeks because of that continuation of the short-term downtrend. And value stocks could see more gains here. I think they bounced off really nice levels. Like we'll go ahead and check out Delta. Bounced off a really nice level on Friday after seeing some sell-off on the initial bounce. Same thing with Southwest. They all seem to sell off, hold their gap, and bounce nicely. So they seem to be showing that inverse relation where they could be in a short-term uptrend while growth could be in a short-term downtrend. I don't know. That's just my opinion. But once again, I expect a lot more broad volatility. I don't think things are going to hold up as much as they will because we are still in a distressed time. And I think as COVID cases continue to rise, it's just going to be a little bit more uncertain as far as determining what things do better and what things can hold out better during a very distressed situation, potentially a lockdown situation in some areas. So that remains to be seen. I think the market will definitely start to discount that. So bottom line, I definitely expect this week to be a down week, and and I probably won't be buying anything once again. I'm still, pretty short. I'm not super short as I was, maybe like a month ago or whatever, because I'm just so uncertain. But I'm definitely mostly short. I've gotten rid of a lot of my longs this week. So yeah, so wait and see. I hope I'm on the right side, but we shall see. This market has been so unpredictable, you just never know. All right, and lastly, let's go ahead and check out the 3 stocks. Okay, let's see. All right, cool. All right, so the first one, talked about this one a lot. It's in the tech area, Dynatrace. Now, once again, the reason why I like the stock, as you can tell, we went through a bunch of high growth companies. Um, they're all they're all trading at triple digit PE. I kind of like this one not only because its PE is somewhat relative, especially considering it's growing 87% this year, 9% next year. I mean, I'd hate to see that drop off, but once again, 87% is kind of a really good year. Going to make 61 cents in 2022. That's not bad for a $35 stock. But really good news. This thing is still growing upwards of 25% growth in revenue. And I like the product. I like the website. I checked it out. I got a good feeling from it. So I think they could definitely create some demand in a time when, as COVID continues to play out, people are going to need more automated solutions like this, whether it's in the cloud or different situations like that. And this company seems perfectly primed to fill that void. Once again, it's definitely, like, the more I've studied it, the automation processes have become less unique. I think a lot of these cloud companies are adopting these types of automated solutions, but it's, once again, I think this will be a time, or there will be a time where the winners and losers will be sorted out. And I'm not 100% sure that Dynatrace is going to be a surefire winner, because, like I said, there's, automated solutions is becoming more common amongst the high growth companies, the high growth cloud companies. And that's usually what makes Dynatrace unique. But this company is not trading at a super high valuation. You're not taking that much risk when you are buying the stock. First and foremost, because it's definitely already profitable. It's growing very nicely, at least in 2021. 2022, as we saw, there's a drop off even in Zoom. So these numbers may not be totally right, especially considering they're pricing in somewhat of a return to normalcy. And I don't think things will ever go back to normal where they were before, especially not in the tech sector. So I think these numbers could definitely have a chance to go up. Triple digit revenue, still growing and profitable. Once again, I think this is one of the safer plays in the tech space, definitely in the tech high growth space. So that's one of the reasons why I definitely keep an eye out on it. And it's at a long-term support, kind of hovering to near its 200-day. But once again, we're looking at this level, this consolidated base right here. This is where it consolidated before it broke out. So you kind of want it to hold 35. Maybe, I don't like using this bottom candle as a support, but it seems to have held right there. So I guess you could use that as a last stand. Let's go ahead and do 33.3, 33.8. Oh, that's not that. Let's do 33 and a half. So if this stock can at least hold 33 and a half, if you're going to get into it now, it should definitely hold 33 and a half. If it doesn't, you can go ahead and get out or whatever. But because then at that point, I think the stock could come down. Maybe there's some secular selling, some high growth selling that takes place. But for the most part, I think this company should hold 33 and a half. But if it doesn't, that should be your sign to get out. Yeah. So once again, Dynatrace. Next one is Vertex. I have been in and out of this name this year. Was lucky to get out of it before the drop. I'm very lucky. I think that one of their drugs got rejected or something, but I really like this company. I think it's in some really interesting areas as far as genomics and just different. They're working with the companies like CRISPR and I forgot someone else to just innovate in general. And I think when I see companies making those strides to innovate, plus they have this type of earnings safety and estimates and all of this stuff. Let's see the revenue growth. I mean, look at this, 62%, 76, 77, like it's pretty consistently going up. And earnings growth seems to be accelerating. They're putting themselves in very innovative areas to succeed for the next 5 years. So I like Vertex, even though they dropped huge on that drug not being approved. This stock seems to have found a bottom, wants to go back up, showed some really nice, breaking some really nice short-term resistance on Friday, has to get above this part. Let's say 132. So it has to get above 133 and a half. Oh, maybe like 134. Let's go ahead. This high is 132. So 134, if it can handily break above that, I think it has a good shot of at least testing that the bottom of the gap at 270, around 270. Yeah, I think it could definitely test that because the fundamentals or the estimates definitely support it, and the fundamentals are great on this company. Trading close to its 5-year PE range. And once again, you're seeing revenue growth accelerate tremendously. And while earnings seem to be coming down a little bit in 2021, I think the genomics aspect of this company is something that could provide a new level of growth that doesn't seem to be priced in now. So we'll wait and see about what exactly happens on that side. But once again, this company has plenty of safety to wait out some of the more consolidated times within that growth space. So I like this company. I think that drop is like a blessing. And at some point, I want to get into this company because it just seems like the low is in. I mean, it went all the way down to pre-COVID highs, COVID lows, held there very substantially. And once again, this is a premier company. Was a premier company even before this drop. As you can see, hit the March lows and actually continued to make an all-time high as early as April 10th or the week of April 10th. Let me see. I mean, the market went through its low period in March of the 16th. This company was back above pre-COVID highs by oh my God, April 7th. That's pretty insane. And that should tell you something about the degree of how good this company is and how resilient it is. So once again, this drop seems to be already factored into these estimates. I mean, it's been a long time enough, so I'm assuming estimates would have been factored in at this stage. So considering things still look good, this one is definitely on my radar, and I want to get into it sometime soon. And last one is Dexcom. Now, Dexcom is also in the healthcare space. They're in the more med tech space. And this company is really interesting. I've watched this company trade around a lot. It makes some crazy moves, especially on earnings days. But ultimately, this company still looks really good as far as the earnings and estimates. Once again, if you want to be in healthcare, I think medical devices and medical technology and genomics, those are the places you want to be in because I think they're going to be the least affected by any political strife that ends up happening. Like, I'm not that big of a fan of pure drug plays, even though if there's a split Congress, I don't know how long it's going to take for the big drug price revamping. I don't know how long that's going to take. That could take a little bit longer versus if it was a complete Democrat government. But as of now, it looks split, so we're going to just act like it is, and I'm just going to stick with the industries that I think are going to be least affected by any type of political strife. So Dexcom fits right into that theory. It seems to be holding its short-term, or its long-term support right here. Actually kind of trading a little bit below that, but once again, I think this company is just extremely volatile, and you can have breakages like that as long as the estimates and everything continue to look good, which they do. Growth kind of teetering off just a little bit, but once again, the earnings still look fine. It's a little bit expensive, but as I said before, this company can still provide you that type of safety in the healthcare sector. And once again, companies that are growing this amount during this time period, it still feels like a time when growth is valued at a very high rate. So once again, this company is definitely expensive. I think there is a possibility that it could come down, but I think it's close to its long-term support level. I think estimates still look fine, and for the most part, even though it's staying below its 200-day, I think this stock wants to go up sometime in the short term. Now, if it starts to test above there and doesn't break above, then I guess I'm probably wrong on this, and this valuation could end up coming down because once again, 101 PE, you got to have that growth to justify it, and I mean, this company, I guess it's still growing, and if it can keep revenue growth above 25%, then that's really good. But it seems to be coming down, so I'm not the biggest fan of this. Out of all the three stocks, this one's my least favorite, but definitely one that I have my eye on and that I think could provide some really interesting price moves, considering the volatility is so high. So if you're someone who's a trader like myself, likes volatility, likes getting into good names, good companies that have volatility, this is definitely one that I would consider. But once again, really on the pricier side, but the growth somewhat justifies it. I probably wait on this, but wait and see if this thing can break above 200 a before I get into it. But that's my take on it. And that's pretty much it. I looked down and I got nothing else left to talk about. So thank you all for watching. It was really great to just go over all this stuff. I really appreciate a lot of your comments and the DMs that y'all send me. At some point, I think I'm going to start doing a segment in these videos where I just go over some of the stocks that you guys send. So if you guys are on the Discord channel, just go ahead and feel free to send me some stock that you want me to put out an opinion on. I have no problem doing it. You know, it's like, it always helps to kind of have someone to go over some of the different aspects. You know, you could like a company for, let's just say, the gross margins, and I could like a company for the earnings estimates. As long as you get both sides of the equation, I think it really helps empower individual investors just going forward. And so I'm not saying take whatever I say as like God's word, but you know, it's an opinion. So if you just want another opinion on a stock, or a technical opinion, or a fundamental opinion on it, you know, feel free to DM me. And I think at some point I'm going to start doing a little segment towards the end of the videos, kind of like a mailbag or something like that. I think that'd be a little fun. So anyways, I hope you guys enjoyed it. I'm going to be doing a video with Amol tomorrow, and I think a guest. We'll see. Hasn't confirmed yet, but it should be an exciting one. So I hope to see you guys there. Peace, and see y'all next time.